Thanks for joining us on Market Day. Let's go straight to Hong Kong for a closer look at the Asian market action with Bloomberg's Zeb Eckert. Zeb, good to see you there. Asian stocks showing gains, although a little limited there this Friday. What's moving the markets as we round out the week?
Yeah, well, good evening to you. A third day of gains for Asian stocks. As you said, a bit limited at this point, but we'll delve into the numbers for you. Tech stocks are actually the biggest movers today. This and that report of better than estimated retail sales in the U.S. That's boosting prospects for these tech companies here. Some names we've been following here: Sony, MediaTek in Taiwan. This is a company that is rumored to be working with China Mobile on television-based telephones. Its stock went up nearly 7% today, and the TAIEX index, in fact, the best performer here in Asia. We've seen more modest gains in Japan, the Nikkei 225 gaining, but we've seen the yen swing between an advance as well as a decline. That's impacting shares of Japanese exporters today. And here in Hong Kong, at this hour, the Hang Seng Index is down just fractionally. It has been swinging between gains and losses for much of the session today.
Now, Zeb, certainly a story we've been following here very closely. The bidding war for fertiliser maker potash continues. What can you tell us about this news that a group of Chinese investors have expressed interest?
Yeah, well, this is an interesting one. The battle for control of this company continues. Of course, you know this well, given BHP's $40 billion bid. But we've learned that Chinese investors approached Alberta Investment Management. This is a pension fund based in Canada to consider a possible joint counterbid for potash. Now, that investment fund, that pension fund in Canada said, no, we're not interested. It's interesting because it just shows the level of Chinese interest in this company. It's also important to point out that Sinochem Group, this is China's largest fertilizer trader, had also approached the potash board expressing its interest in the possibility of holding talks. No word on whether that will in fact happen, but Sinochem continues to say it's watching the situation very closely. So don't rule out China in this fight, we should say, for control of potash.
Yeah, it's going to be providing us with lots more stories, I bet. Just finally as well, Zeb, wanted to ask you about high-flying airline stocks. Why are investors turning bullish on the shares of Cathay Pacific?
Well, it's finally good news to be talking about upward moves for airline stocks. And RBS is out with a new note saying shares of Cathay Pacific Airways look undervalued, that they're attractive for investors right now compared to all of their peers in the Asia-Pacific region, including Qantas Airways. And our chart of the day here at Bloomberg basically shows that Cathay's price-to-earnings ratio has remained below those of Singapore Airlines, China Eastern, Qantas, all of these carriers. And keep in mind, Cathay is adding new routes, it's adding capacity, and it's seeing firmness in pricing, especially in those very important business class seats.
Zeb, it is Friday. Have a great weekend. Thank you so much. We'll see you next week. Zeb Eckert there from Bloomberg in Hong Kong. Let's return to our guest host today, John Noonan from Thomson Reuters. John, just firstly, I mean, we've talked a lot about the markets. What investment strategies are you at the moment employing?
Well, you know, there's still quite a bit of uncertainty out there at the moment, and you will get these extremely bullish calls from one segment of the analysts. Another segment is think it's all doom and gloom, and you better sell this rally real quick before everything crashes off. And I really, you know, I'm not going to sit here with a crystal ball and say which one is right, and you know, I'm not going to fall too much in love with my views. And I think investors have to be flexible at the moment. And you know, when I was trading for 27 years, whenever I sort of felt very strongly about something fundamentally and fell in love with my view, it's when I lost money. And certainly during times of uncertainty, you have to follow the technical picture. And I think the technical situation is quite clear at the moment. We are at the upper end, as Julia mentioned much earlier in the show, the upper end of a trading range in the ASX, for instance. And so I think I would much rather be a buyer of shares if they broke above 4,700, if the ASX broke above 4,700, than buying at these levels or buying on shallow dips to 4,400. The temptation emotionally is to buy when it's weak and buy low and, you know, catch the bottom. But I think that it's a very dangerous strategy, because who knows, maybe the bears will be right. Maybe the situation in the U.S. will deteriorate further. China will slow down. You know, that's not my view. But, you know, you have to be flexible because it is uncertain. And there are some pretty plausible arguments on both sides of the argument. So I think that you really have to be flexible and pay very careful, close attention to the technical picture. And right now, we are at the upper end of the range, so I wouldn't be a wild buyer right now. If I was day trading, I'd probably even sort of fade some of these rallies, waiting for the next bit of bad news to come out. But I think I think the risk is to the upside. I think the risk is that the markets, risk assets, are going to move higher. I think the markets are too bearish. I do believe there's too much cash still bottled up on the sidelines in low-yielding treasuries and bunds and no risk assets. I think that money, there's more of a chance of that money coming out between now and the end of the year. However, I'd rather see confirmation of that, not fundamentally but technically. I'd rather see those markets break out to the top side, the S&P 500 in the U.S. move up above 1,400, or market, the ASX, move above 4,700. Then I would be a lot more confident.
And once it does, I mean, what do you think could be the catalyst for that? I mean,
yeah, sometimes that comes right out of the blue, but I think the catalyst will be that the sky is not falling, that even if it's just the U.S. economy is going to be bumping along really, really well. I don't see any fantastic news coming out of Europe. I don't see fantastic news coming out of the U.S. I think that the China news, the Chinese economy will continue to go along quite strongly, but not stronger than it has been. So it's hard to see this catalyst, to see the markets take off. However, I think there's a risk they can, not because of one particular catalyst, but just because things aren't so bad. There's not enough money being put to work out there. And when that money does go out to work in the rush before the end of 2010, as when investors start saying to their fund managers, I need some return now, you could see a surprise move to the top side. You could see the ASX, for instance, break above that 5,000 high that we had earlier in the year. So I think the risk is to the upside, but I'd rather have confirmation.
Coming back to very near term tonight, obviously, as you've been saying throughout the program, the US jobs report is going to be crucial as to, well, markets, but particularly the currency markets too. Just looking at this, I mean, obviously this week we've seen some interesting developments out of Japan, with the Bank of Japan. I mean, its strategy that it put in place, the market just didn't like it at all, and the yen just continued to strengthen there. Well, what have you made of this move?
Well, we're getting quite a few threats from Japanese officials, and the Bank of Japan doesn't make the decision to intervene in the currency market. It's the MOF, it's the government that decides whether or not to go in and stop the yen from continuing to strengthen or the dollar yen to continue falling. You're getting quite a few threats. The markets do believe, there's a rumor going around Tokyo, in fact, a couple of weeks ago, up until last week, that one of the reasons that the Bank of Japan representative went to Jackson Hole was to quietly ask permission from the U.S. or some tacit approval from the U.S. if we intervene, is it okay? Both the U.S. and Europe are not very keen on any central banks to intervene or to keep their currency from strengthening. It's been a major issue with China, as we know. But I do think that at some stage the Bank of Japan or the MOF will decide to stop the yen from strengthening. And we've been talking about this better case scenario for the U.S. job numbers, but say the U.S. job number is a terrible number, and the asset markets that we've seen rally all week suddenly start coming down again, you will see the yen strengthening, because the yen is the safe haven currency right now, and you will see the yen probably pressure that 83, 82.5 level, which some people say is a bit of a tipping point for Japanese authorities. So we could see early next week some moves towards that 80 level, and it'll be very interesting to see if the Bank of Japan intervenes. And if they do, how much they will intervene and just how successful it will be. And
by intervene, you mean buy US dollars?
That's correct.
And then what would they do with that, do you think?
Well, that's a very good question, because, the last time the Bank of Japan intervened in the start of 2004, they bought, I can't remember the exact number, but it was in the vicinity of $400 billion US dollars. They literally doubled their reserves and became the biggest reserve U.S. dollar holder in the world. They've been passed by China because, of course, China intervenes every day. So their U.S. dollar reserves would go through the roof if they if they intervened in anything to those proportions of 2004. Now, they're getting treasuries that they would, normally buy U.S. treasuries, but they're yielding virtually nothing. They're buying a depreciating asset, which is U.S. dollars. Their fiscal position in Japan is already compromised. They certainly don't need to add to a massive amount of balance sheet of a non-performing asset. So there is talk that the Japanese authorities will diversify, similar to what China's doing. They'll diversify those reserves, and one of the currencies they may buy is the Australian dollar. as a commodity hedge, and the Australian dollar is an appreciating asset. So all sorts of permutations come through. If we start seeing intervention by the Bank of Japan, it will be such an interesting story in the foreign exchange market.
Yeah, absolutely. And just quickly on the euro as well, I mean, you've already talked about what the IMF has been saying in the past week or so. So your thoughts on the outlook for the euro in the near term then? I'm
not that bullish on the euro, and I think the market is getting a little bit too bullish on the euro because, we've seen some good economic data out of Europe, especially the Q2 GDP data out of Germany was so strong. But I think that's all backward looking, and I think now that Europe is going to be putting in place their very strict austerity programs, I think you're going to get a backlash from the man in the street on that. And also, too, if the U.S. economy doesn't really, grow very strongly, their export markets won't be that strong. So I'm not that bullish on the euro. I don't see a sovereign debt crisis boiling up again between now and the end of the year. But I think some of the issues involved around the peripheral European sovereign debt crisis may pop up again between now and the end of the year. So I think like with a lot of currencies and the U.S. dollar in general, I think we're going to see some mostly range trading between now and the end of the year.
And here in Australia, of course, the RBA meets again next week. I mean, no one's predicting that they'll move. What are your thoughts, though, and what will you be watching for in this statement?
Well, the markets are really pricing out any chance of an RBA rate hike for almost the rest of this year, and so it's become very neutral. However, the Reserve Bank has been quite upbeat, consistently upbeat all year, even when the markets have been full of doom and gloom. They still see a very good story in Asia. They still see the Australian economy growing at a trend. They still talk about, possibility of inflation pressures. So, we had a strong GDP number come out this week. We've seen surprisingly strong numbers coming out of Australia for months now. If we do get a strong jobs number, which comes out next week as well, if you see the U.S. start to recover, if there's a decent jobs number tonight in the U.S., and China continues to go along quite strongly, probably an interest rate hike will be on the cards at some stage again, if the world stabilizes and our numbers continue to come out at these very strong levels. So, on the other side of that, the banks are still saying we are paying more than we should do for funding, so that takes away the RBA's need to raise rates imminently. But I do think there will be an upbeat statement. I think the markets are probably not pricing in enough the chance of a rate hike by the end of the year.
Right. So you don't think we'll see one till perhaps 2011?
No, I think we're at least a few months away, but we'll have to see what the data says.
Yeah, it's going to be such an interesting weekend, isn't it, John? Thank you so much for that.
Thanks, Brady.
John Noonan there from Thomson Reuters. Do stay with us. Plenty more business news and analysis coming up next.